Hello and welcome. You're watching Money9, India's first multilingual platform for personal finance from TV9 News Network. I'm Sakshi Batra, and on this show, we're going to be discussing all about market fundamentals and to understand what should be the most prudent strategy that investors can follow at a time when the markets have been consolidating and trading in a tight range as well. To help us understand all about the markets, will be a very special guest joining in just in a bit. But before that, let me quickly request all our viewers who are watching us on our YouTube channel to like and subscribe to this channel and also hit that bell icon so that you can get notified whenever we add a new video. Also, you can get connected with us through all our social media platforms, Twitter, Facebook, LinkedIn, and Instagram. The handle is given below on your screen, so you can hit that page and also follow us right there. Also, you can visit our website, money9.com, for all the latest information, news articles on markets and on personal finance as well. And time now to introduce our guest to you. I'm joined by Mr. Kranti Patini from WealthMills Securities on Market Meter today. Good afternoon, Mr. Batini. Thank you very much for taking out time for Money9. It's a pleasure, as always, to speak with you. So help us understand what is your understanding of the markets at the current levels. We have been seeing constant consolidation taking place in the markets, very, very tight range in between the markets have been facing in fact, entire month of June, we've actually seen the Nifty move in a range of just about 300 points. And this is a very rare kind of a move that we have seen on the Nifty. So how are you analyzing this kind of consolidation and which way the markets will go ahead from here?
Yes, Sashi, you are absolutely correct. Markets are in a complete range bound. If we analyze the data, at present there is, of course, there is a dichotomy in the market, which ways markets are going to be headed. And in a couple of weeks, we are going to see again, we are back into the earnings season. If we analyze the Q4 data of earnings, the earnings are, companies have delivered fairly well despite of lockdowns and the negative news. But Q1, we all know it is 50%. There was a lockdown of the economy. So how the
Yeah,
companies are going to deliver the numbers is going to, we need to wait and watch. That's why at present market is in a complete range bound. And also,
absolutely.
if we observe uh, the fund flows have been little bit slowed down from the FIIs and domestic institutional investors are concerned.
Yes,
That's why
yes.
we can see the activity and the fund flow is at a complete range bound kind of thing. That's why markets are in a complete range bound. But
Hmm.
investors can use this range bound nature in the market to do a value stock picking, because right now it's very difficult to get the value in the market. So investors need to have their own strategy in these markets. And one of the crux in these markets is investors in this range bound, they can do a delivery based kind of trading. If the, as you rightly mentioned, the Nifty is in the range of 300 points and it's trying to find 15,850 is the crucial some kind of resistance level for Nifty.
Yeah.
So investors and traders can do a range bound trading during these kind of range bound markets.
Absolutely, sir. And you're right in saying that, the kind of strategies that investors can adopt are extremely important at this point in time because there is this tight range, very difficult for the traders to also trade. But for long-term investors, like you said, that, they can use this opportunity for value picking. So help us understand which are the sectors that you're thinking that, the value still exists despite the fact that markets are at hovering near all-time highs.
Sakshi, definitely we can see value in autos because
Okay.
uh, the numbers are, we need to wait and watch how the numbers are going to be. I can see the month on month numbers, some slight improvement with respect to auto numbers, but
Yes.
markets are forward looking animals, as we always discuss and mention. So, auto numbers, because as we see, the commuters will prefer personalized travel. It can be two-wheeler or it can be four-wheeler. So we can see some kind of visibility in terms of autos are concerned. And also we can do some kind of cherry picking in pharma sector also
Yeah.
going ahead.
Absolutely. So some cherry picking in pharma and auto sector is something that you're definitely keeping an eye out on. Let me just dig a little bit to understand from the auto space. We are already getting some sales numbers for this month, June month, are already flowing in, and we are seeing that some of the companies are reporting better than estimated numbers as well, including Bajaj Auto, for example. It reported a 24% kind of an upside on the sales that they have done. They sold about 3.5 lakh units there. Escorts has reported a 15% upside in the total sales that they have done in this month of June as well. And there are these pockets that we are seeing. Which is the pocket that is more attractive to you right now? Is it going to be the tractor space, the rural space in which the autos are going to be perhaps doing better than the others? Or is it going to be the two-wheelers and passenger vehicles that you prefer more?
Sakshi, if we have to look at the auto numbers, the passenger vehicles numbers are going to be decent, and it's expected to do well in the coming next couple of quarters, because before the lockdown of the economies in the month of uh, Feb and March, okay, there were, if we walk into any kind of auto dealer, especially the passenger vehicle dealers, okay, the waiting period for most of the vehicles were it is months and weeks. So the autos are sector has been, the passenger vehicle and two wheelers have been affected with because of the lockdown in the economy. But
Yeah.
currently, as the economy opens up, we are going to see some kind of vigorous buying in terms of the passenger vehicles are concerned. But uh, what I anticipate is the monsoon. We are expecting a normal monsoon across India. So, as you rightly said, escorts and the agri sector is going to do well as the monsoon is uh, spread across India, and as the monsoon progresses well, we are going to see the agri-based like tractors and other uh, stocks are going to do well.
Okay, understood that too. Also, sir, in about say 10 days from now, we are going to be seeing the Q1 numbers also getting to get reported by the IT majors first. Of course, we see that, despite the second wave, despite the kind of lockdown again, the stricter lockdown that we have seen nationwide, it's the IT sector that has fairly not gotten impacted. Do you believe that this time around, this sector will perhaps be leading from the front when it comes to the earnings? And what is your entire outlook on the earnings front for Q1 also?
As rightly you told, Sakshi, IT is going to be the game changer. We have been discussing from a couple of months. So we expect a decent earning growth with respect to IT is concerned, because the digitalization is going up across the globe, and IT is spreading across all the sectors of the economy. So
Hmm.
uh, we expect a decent kind of returns uh, from the technology sector. So we need to wait and watch how the mid cap IT is going to do.
Yeah.
That's where it's going to be the game changer. So with respect to other sectors, we need to wait and watch how the FMCG is going to perform, because the economy was completely in lockdown in Q1. Autos, we all know, we don't
Yeah.
expect any big fireworks from autos, because
Hmm.
autos was going to be laggard in the last sector. But going forward, autos, the numbers are going to improve drastically.
Absolutely. Now let's talk about some of the stock recommendations of yours. First, we'll talk about your star picks because these stocks have actually done very well for investors. After your recommendation, we've seen a sharp run up in these particular stocks as well. First up, let's talk about Rain Industries. Your pick from the fertilizer space, which has already shot up quite a lot. What would you want to say to investors who had invested at the time when you had recommended on 12th of February, when the price was almost just 150? Now we have already seen a rise of almost 37% from the peak levels. What's your recommendation now on this stock, sir, that you had recommended?
Sakshi, Rain Industries is a calcining coke producer. As there is a rally in the metal stocks, so since the calcining coke is important raw material for aluminum and alumina, so Rain Industries have rallied with respect to the metal stocks are concerned. So, having said that, the stock has rallied nearly 40% in past 6 months. Uh, I encourage the investors to take some small profits from the table, book 50% profits from the table. As the market is in a consolidation phase, if the stock corrects, so you can re-enter again at a much lower levels. So the fundamentals are intact, the earnings are intact. But since the stock has rallied nearly 40% in past 6 months, it is advisable to take the investors to take some book some profit from the table at this current juncture.
Okay, Rain Industries, you can book partial profits at this point in time after the stock has given a return of 37% at its peak level as well. The other stock that I'd like you to speak about is Asian Energy. Again, this stock was recommended by you on our show on 12th of February. The recommended price was 90 rupees, and the stock has already given a return of 44% at its peak level. What would you want to say on this stock, sir, now?
Sakshi, this stock, when we advised to the investors on your show, there was no momentum with respect to the oil and oil allied stocks are concerned. Asian Energy is mainly into the seismic survey of oil drills and oil wells. They do the surveys for different oil manufacturers in India. So their predominantly their contractors are ONGC. They do the contract surveys for ONGC and Oil India. Right now, as the crude oil prices are back at $100 per barrel, there is a heightened activities coming back with respect to oil exploration activities concern again across the globe. So since the stock has gone up nearly 44% in last 6 months, uh, uh, investors can book some small profit at present juncture. They can stay invested remaining, and any dip the market gives the opportunity, they can re-enter into the stock. Since the company is entering into infra service also, they're one of the India's largest specialized 3D seismic survey company, and the margins are pretty much high in this business. As oil is hovering around $100 per barrel, we can expect some kind of heightened activity with respect to oil exploration activity is concerned. So this
Sure.
company is a favorable company in small cap segment, but investors can book some profit from the table and they can remain stay invested. Any dip market gives, they can re-enter again.
Absolutely. And then congratulations to you, sir, for recommending these star picks of yours. And I'm sure the investors who've been sitting on it have made extremely good profits on this stock recommendation of yours. Help them now understand, which is the new pick that you would want to share with them at this point in time when the markets are hovering near all-time highs. Where is it that they can now invest, for a medium to long-term perspective?
Sachi, today I have a small cap stock with a market cap around 400 crores. The stock is
Okay.
Max India. Uh, Probably, if we analyze the business nature, it's a wonderful business model. As we are talking about the pandemic and healthcare is concerned, Max India, they have a business model. They have a model which is into real estate, which the model one of the model is Antara, that is mainly for the elderly people, the old age homes kind of thing. It's a beautiful business model if we analyze the data. And also, they have a business segment called elder care. And
Hmm.
in India, it is a very nascent stage at present. So,
Yeah.
if I'm in abroad or if I'm in India, and if I want to take care about my uh, parents, to give a proper care, the
Hmm.
elder they're currently in. This business is at a very nascent stage, and it's expected to do well in the days coming years. So the
Sure.
stock is currently at 70 rupees, currently around 69.50. Investors who have a long-term horizon, they can think about investing at these levels. Uh, at present, the stock have a potential upside of 25% for 1 year. But the serious investors who want to accumulate the stock at every dip, uh, uh, if the company is going to expand their presence to different parts of India in the coming quarters, from metros and tier 2 cities, this is definitely going to be a game changer for this business. And elder care is a nascent stage in India. And at, at present, we have nearly 10% of population as NRIs, and they want to give, or the Indians also, the resident Indians also, they are much careful about their elderly parents and elder care. So this business is at a very nascent stage, and I'm
Sure.
sure the business is going to expand in the coming
Sure.
years.
Okay, so Max India is something that from the small cap space you could keep on your radar. There's a 25% upside that Mr. Patini really sees from these levels. Thank you very much, Mr. Patini, for speaking to us and sharing your insights on markets and sharing these recommendations. Always a pleasure speaking with you.
Pleasure is mine, Sakshi.
All right, and then let's move on to see how the markets are trading. We're over half time now, and the markets are still subdued when you talk about the benchmark indices. 52,417, the current level for the Sensex is down by 64, 65 odd points. The Nifty 50 is also slipped below 15,700 now. Remember, there's a cut of almost 32 odd points right here. 15,689 is the level, and the Nifty Bank is also slipping further, 60 odd points of a cut there too. Although the cuts are minor, just 2% cut for these three indices right now. But throughout the trading session so far, the markets have remained muted. What's slowly trying to inch itself back into the green and buck the trend right now is the broader market space. Small cap indices, the small cap stock, in fact, up about 0.20% in trade. 25,282 is the level for that one. BSE mid cap index also up by just flat right now. 22,536 is the level at which the BSE mid cap is also trading at. Let's also see how the sectoral picture is emerging at this point in time. So as far as the sectors are concerned, there are some pockets where you're seeing subdued action, like IT stocks are trading with losses of almost 0.5%. The private banks have a 0.25% cut right now, and 0.25% of a cut right now, and 0.5% cut for the IT space. Metals are also just flat right now, and what's really holding up the indices higher today is clearly the auto index. 1% uptick for this one, followed by pharma. Some gains also being seen in the PSU banking space, and FMCG's counter are also providing some kind of support to the markets today. When we talk about the Nifty 50 gainers and losers, the gainers back in the early morning trade had all stocks from the auto space. Right now, also they are leading. You have the two-wheeler majors, Hero Moto, Bajaj Auto, both riding up high. Maruti Suzuki has inched up higher too, and Tata Motors is also 1.5% up in trade. Hindalco from the metal space has now found itself its place here, 1.6% uptick for this counter at over half time. When we look at the laggards now, this stocks that are not really supporting the markets today, you'll see some IT space stocks like Wipro, Tech Mahindra, also cement stocks like Shree Cement and Ultra Cement are not doing too well, and L&T from the Infra Pack is also down by 1.25%. Overall, it's a subdued day for the market so far. We'll just have to see whether the last 2 hours really change anything for the markets as far as the direction is concerned. Already so far in the week, we've seen that the markets have closed the day in red and the bears have gone home happy. Will that change today on the weekly F&O expiry day, or will the bears again, grab the headlines as far as the closing of the markets is concerned? We'll keep you posted on all of that, and for that, you need to like and subscribe to our channel. Hit that bell icon so that you can get notified whenever we add a new video, and stay connected with us through all our social media platforms like Twitter, Facebook, LinkedIn, and Instagram to get regular updates on markets and on personal finance. And also, you can watch our website, read our website, money9.com, both in English and in Hindi, for all the latest news articles. Thanks for tuning in.